and welcome to the Crypto Jungle. My name is Baloo the Bear, and here on the channel I keep crypto simple. We take a look at the price in the context of volume using the Wyckoff method. If that is something that interests you, then why don't you hit the subscribe button? I stream every Monday, Wednesday, and Friday. So without any further ado, let's just get into it. This is actually take two. My apologies to those who joined in on the first take, but as soon as I pressed go live, computer crashed. So time for an upgrade, I guess. Good morning if it's morning. All right, so let's jump into the markets. I want to take a look at the market condition, the market health, as well as take a look at some altcoins that are showing some strength. So let's just dive right into it. I have changed my chart style. I've changed my chart theming. Let me know what you think. This is an educationally focused channel, so I'm prioritizing ease of reading over branding. Let me know if you like it. Let me know if you think it's ugly. Let me know if you think it, if I should go back to dark mode and the pink and blue candles. But anyways, taking a look at total market cap, we were in this consolidation, this accumulation range, broke out of the range with a very, very strong rally. That rally invited a lot of over leverage into the ecosystem, and that was flushed out. So are we just priming to set another strong rally? Are we just going to continue in that trajectory with just this little liquidation event? Or is the weekend going to bring some more downside? As you can see, we do have a little bit of a gap in the support range. Typically, when we have an accumulation range, we come back and test support, usually with candle body closes. So a lot of wicks going down there. That's showing that at least the price is going down and it's getting bought back up. But are we going to have to shake things out a little bit more and get to those lower levels? Now, if this happens on total market cap, it's probably not going to be very good for the altcoins as a whole. But let's go ahead and take a look at Bitcoin dominance. BTC.D. And let's just make that one frame here. So I had these areas of interest marked down. They're all different colors now, so let's make them a little more obvious. A lot of dark mode fans out there, but there's also a lot of light mode fans. Why don't we do this? You know, it's not good for the algorithm, but if you like dark mode, hit the like button. And if you don't like dark mode, hit the dislike button. Let's see. Actually, I don't know. Maybe if you hit the dislike, you won't see my videos. I don't know. Maybe that's a dumb idea. Okay. Put a 1 in the chat if you like dark mode over light mode. But yeah, we are looking at Bitcoin dominance bouncing off of the 40 level. What you want to see as an altcoin trader is you want to see us come down and break through the 40 level. If we can break below the 40, that's indicating that there's more money heading into the altcoin space. There's going to be more consistency. There's going to be more momentum heading to the altcoins if we can break down below that level. If we continue to rally, that is not what you're going to want to see. And a rally on this chart can be rather interpretive and confusing, because we can rally here and the alts just get decimated, but we can rally here in other contexts where the alts actually fare well or at least stay stable. Currently, we're seeing a lot of alts kind of bleed out as this is trending to the upside. So hopefully that trend does stop if you are an altcoin trader. If you don't hold any Bitcoin in your portfolio, the easiest way to not care about this chart is to hold Bitcoin. Bitcoin, in my opinion, is the best asset, the safest asset in crypto that you could hold. But you know, we're at that stage of the market where Bitcoin is useless. Okay, so one coin that is getting a lot of attention right now is, let's take a look at my layouts. One of the Ethereum killers. And that is Avalanche. So Avalanche has a lot of apps that are being built, that are being used. Currently, there's a new kid on the blockchain called Oh God, Trader Joe XYZ. So it's a DEX. Damn you, Trader Joe, because, you know, I got into the Avalanche ecosystem quite early, and I've got a position in Pangolin that I am, you know, I had to average down on, so I'm not cutting it to go and jump into Trader Joe, but Trader Joe probably will get a little bit more momentum as it's kind of a more familiar name. But anyways, go check out Trader Joe. There's a lot of stuff being built on Avalanche. Keep an eye out on the NFT space. Actually, you know, I'm kind of new to Avalanche. If anybody is in the chat that knows the Avalanche NFT marketplace, the most popular marketplace for Avalanche, mark it down in the chat right now, and we'll take a look, because NFTs are really driving a lot of these these layer one solutions into markup. So we do have a breakout. So we're in this very long-term consolidation, reaccumulation after decline, one of the weakest of the Wyckoff reaccumulations, but nonetheless, once it starts to go, it starts to go. We've got some nice momentum here, had a little bit of a bull flag right here. Let's draw the bull flag. Let's get the bull flag marked down. We had a bull flag breakout and test. And now we've broken out of the macro accumulation. So some ambitious targets that I have in this one is just kind of the width of the range. Now, typically these are measured. There's lots of ways to get price objectives. You can do point and figure, you can do fib extensions, you can do measured moves. All of them are correct, and all of those can also be broken as well, because at the end of the day, this is just people buying and selling, right? So it's not, there's no secret to this stuff. It's just different techniques that traders use to determine price objectives. So we can grab the width of the range, and we can pull that up to the area of the breakout. And that gives us a first target of around $100. $100, big even number. There's often supply that comes in at $100 for most coins. When they reach that $100 milestone, there's a lot of psychological resistance. You know, people tell themselves, hey, I'm going to get it down here and I'm going to sell it at $100, whatever the case may be. It's the same with a dollar. When you have these penny stocks and these penny cryptos reach $1, huge psychological resistance. Nice big even number. So watch out for the psychological resistance that may or may not happen. There's no guarantee that we even make it up to this level, but if Avalanche gets really bullish and pulls a Solana on us, don't be surprised to see some multiples of the range occur as well. So we can actually copy paste that and bring that up to 150. And if we wanted to do it again, because we're just degens with unrealistic price targets, then we can do it again, and we get to just shy of 200. So yeah, again, you know, let's take this one step at a time. Let's see how the market responds if $100 is placed in front of us. But right now, you know, the market is looking a little sketchy out there. So Bitcoin needs to make up its mind. Let's actually go take a look at Bitcoin. So again, similar structure to total market cap, but that's because it takes up 40% of the market cap. So the structure is going to be very similar. We have broken out of this accumulation pattern. We have come down and tested it. The pattern could be tested a little bit more with some candle body closes, but if it does begin to rally beyond this point, that's going to show quite a lot of bullishness and that the demand is in control. Overall, the volume is relatively flat at the moment. You can see that it's flat. What we want to see, let's make this a brighter color. Let's make it blue. What we want to see is an increase in demand, right? We want to see increase in demand on the rallies, and we want to see a decrease of the supply on the reactions. So be on the lookout for that. Going down to the smaller time frames on Bitcoin, we can actually see that there's a little bit of a range developing on the backup. Said that kind of weird, on the backup. But we can make note of that as well So going down to our seller's climax, which was barely a test at the top of the range, opening that up to our automatic rally line, and we're sitting on top of it. So as long as we can hold support, and it looks like there is a little bit of demand, there is liquidity just below this line, if we can hold it and break out to the upside, I would like to see us, for a continuation and confirmation, get above here on the 4 hour. So as the day continues, if we can get a close above 48.4, we'll call it 48, let's call it 48.5. You see a close above 48.5 on the 4 hour, I think that will be a signal, that'll be a continuation signal that we can at least break 50k, or at least begin to test 50k. 50k is a very psychological level. As you can see right here, we have this very significant support / resistance area that we are trying to work through. But if we can get above it, we'll be above it. When we're above it, we're bullish. When we're below it, we're bearish. It's really that simple. So be on the lookout for that. Let's catch up with the chat here. Yeah, sunglasses on. 1, light mode, it's all good. 1, -1, -1. I don't know what that means. 1 vote for light mode. There's always one freak. Dark mode is cool, and it's in line with your branding. Yes, I agree. It was done for branding purposes. 6% of males are colorblind. Light mode is better. Oh, interesting. Get borked. Okay, let's keep it civil. Red, green, colorblind. So what colors do contrast for you? I'm actually genuinely interested. How do you set up your charts to see the contrast? Christmas must suck for you then. All right, having a little bit of a troll discussion down there. Have a squiz at XL and give your option on both the chart and its use, please. At XL. XL is the ticker. Can you talk about the fractal version of the bigger structure playing out? I'm not sure I follow you, DC77. Talk about the fractal version of the bigger structure playing out. So, you know, okay, so yes, this has been going around the group where this is a possibility for a distribution, where this is just kind of is shaping itself up to be similar to this right here, is similar to this structure. Now, of course, that this is a possibility. You know, we have to entertain the idea that you know, we could be in a bear market. We could be in a bear market. So this could just be a macro lower high for a fractal that could play out similar to what we're seeing, to what we saw back here, right? We had just a fall off, just very, very sudden. Couldn't really plan for this reaction at all, sell off, and then we had a rally up above. So if this fractal is to be paid attention to a little bit more, we need to see what happens as a result of the rally. So if this is step one, we have the reaction, then we have a little bit of a consolidation, and then we rally off of that. That's what we're waiting for next. We're waiting for the rally off of that level. So how the rally responds, this would bring us up to probably just shy of 60, so $57,000 if we get something similar in structure. I don't think the key here is that if it is bearish, it's not going to make it above this high. If it is a bearish structure, it will not make it above that high. That's key. So be on the lookout for that. So basically, you know, what we're looking for is, as you can see here, we rallied hard, fell hard, consolidated, rallied again, and then came down. So rallied hard, fell hard, consolidated, rallied again, making sure we don't make a higher high than the 60, and then maybe a test back into the range. It could be choppy for a while. It could be choppy for a while. So there are no guarantees in trading. There are only probabilities and your position. So whatever side of the trade you decide to take that side of the trade. There is no correct. All that I have to lean on is that I believe we're in a bull market. If we are to change that narrative, this is where that will change. This is the area where that narrative changes. So it's very difficult to front run these types of ideas because you do need confirmation. Confirmation in this area does need to come with a lot of protection, because the confirmation comes as we break below 28,000. That's not the confirmation you want to wait for. That's not the one that you want to hold positions waiting for. So it's a very choppy, undecided, difficult to manage area that we're in right now. So it does require a lot of care and attention and protection. So if you aren't aware on how to protect yourself in this space, then I encourage you to join the Traders Academy, where we can talk more about risk management and how you can protect yourself through position sizing, through stop losses, and just not over diversifying. You know, this market is very correlated. If you're holding 30 coins, no offense, but I think you're doing something wrong. Unless your goal is to spread out and not touch, that's fine. It's a different strategy. There's many different strategies in this market. But if your goal is to, you know, take 30 different trade setups and try and trade these things, good fucking luck, man. Good fucking luck. But yeah. Yeah, ignore my pink room, please, with my pretty princess curtains and my beautiful, you know, I like to, don't judge me, man. I like to sleep a certain way. I like to feel like a little bunny, all cuddled up in pink curtains. Don't judge me. All right, so that's Bitcoin. Let's take a look at what's going on with Ethereum. Similar structure, is a little bit sketchier, honestly. Like, Ethereum's not in the right place as Bitcoin dominance continues to rally. The altcoins are not going to be doing great. So, you know, its structure is a lot less certain. Similar spot, like we're working out our backup on this macro range, but if you're trying to trade the lower time frames, it's not the place you want to be. It's very, very choppy. You might be able to squeeze a short in, but you know, going down to like the 4 hour and stuff like that, we really did need to get above this level of around 3,600. We were unable to do so. So more than likely, we'll just take a ride down to the bottom of the range, something along this line, maybe even potentially all the way back down here, as this was the area of the seller's climax. Let's just let's just put the seller's climax in right there. So we came down for our test, seller's climax, open it up to our automatic rally. Boom. So this is kind of the trading range that we're in right now. Poked our head above. This does need to turn into a higher low. If it does not turn into a higher low, then it's probably just going to ride itself back down to the bottom of the range. So be on the lookout for that. What's a better stable coin to cash out, USDT or USDC? Now, it depends on your time parameter for the cashing out part. Stablecoins do have some risk. There is some risk associated with stablecoins. There are alternatives like algorithmically pegged stablecoins that aren't backed, that are, you know, somewhat decentralized, like DAI. But, you know, the government is really, they're targeting stablecoins. It's the stablecoins that are really making them nervous. It's less so about Bitcoin right now, and it's more so about DeFi and the fact that effectively we're printing our own money. You know, we're printing, in the case of DAI, we printed our own money. We, as a community, have created a cryptocurrency that's pegged to an external cryptocurrency, an external fiat currency, the US dollar, and we've created our own currency. This is interesting and threatening. So in terms of cashing out, like if we're talking end of cycle, end of bull market type cashing out, get into fiat and make your life better. If you want to put a down payment on a house, if you want to buy a house outright, if you want to just have cash in the bank that is far safer. You know, DeFi's new. You know, a lot of this stuff, a lot of these applications came out in 2018, so it's very new. So the safest coin currently that we have right now, I would say, is USDC. But again, you know, they all come with risk, and they will all require you to make a move or make a, you know, transfer it for something that becomes legally approved when the time comes. The most liquid is Tether, but Tether has a lot of FUD, and there's a lot of, you know, eyes on Tether right now from the legal point of view. So there's no clean answer. There's no clean answer. Me personally, I would like to think that, you know, decentralization and community-owned money is the way to go, and having something like DAI is basically, you can't shut DAI down. Now, there's other exploits and there's other problems with DAI because it's pure code. It's pure code, you know, and we're creating all these applications that could interfere with, or it could be exploited one day. We don't know if we could see an exploit with DAI. That being said, you know, it could also become illegal to own DAI. Your local country may mandate any stablecoin that is not a central bank digital currency is illegal for you to hold. It can become a felony. So there's a lot of risk. There's a lot of things to consider, I guess, would be the more appropriate way to say that. But, you know, when the bull market's over and you're ready to sit for a year or two, just cash it out, buy some property, buy some assets, but, you know, diversify into more stable things. You don't have to be all crypto all the time. If you have an opportunity to make your life better, take it. Take it. Cashing out on the way out and buy back when the market is down. So buy back when the market is down, absolutely. You know, buy in the depths of the bear market. You're not going to need to buy for 18 months after the blow off top, in my opinion. You're not anywhere from a year to 18 months. So cash it out, get rid. Like, you can do a lot of stuff. You can, you know, like I said, make your life better, pay off some debt, you know, put a down payment on a house, whatever the case may be. And then you have a year to kind of plan. What I did in the previous cycle is, you know, I bought a house, and that house afforded me a line of credit. So now, you know, able to cash out, able to buy hard assets, and now able to have access to leverage in a safe way that can't be liquidated, because effectively that's what leverage is you're getting a loan, right? So I have access to leverage without, you know, doing it on an exchange where I'm paying perpetual funding and have the opportunity for the exchange to liquidate those positions. So you got to kind of get creative and realize that when you are investing and trading, your goal is to save for your retirement, save for your future, but make your current life better as well. So yeah, you know, you got plenty of time to move it into fiat, go pay your taxes, go do what you need to do, plan on which coins you want to buy in the bear market, and then reinvest. Holding for 10 years, gonna go to a crypto tax haven country, and there's gonna be more and more of them popping up. This is going to be a very big thing. I would speculate. I like this. We're doing some philosophy style chatting in here. So basically, you know, governments are not going to go down without a fight, especially if the infrastructure really begins to build quite a bit. And where one country overregulates, let's say the US just says owning Bitcoin is illegal. You cannot own Bitcoin. That is a felony for you to own Bitcoin. That's going to be devastating for the US economy. It's going to be devastating for the retail investors inside of the US, but it's also going to be an opportunity for other countries, knowing that your crypto can literally live in your head. They know that they can offer these visas on arrival. They can get you into their country. They can offer no capital gains. They can give you crypto-friendly regulation and boost their economy. If the US wants to shoot themselves in the foot and stifle innovation, that's a very short-sighted and irresponsible way of looking at the world, especially when the US, up until this point, has been one of the most innovative countries to be in. they're going to shoot themselves in the foot. And I think they are almost going to be forced to do so. They have so much control and so much power with the US dollar that under no circumstance are they going to really be able to embrace blockchain without losing that power. So the US is going to really become globally disadvantaged. And, I'm not an economist. I'm not some politician. I don't know what the actual strategies for the people that really understand economic global power. I don't, those people that truly understand global power, how are they going to handle this? Because it's here. Pandora's box is opened. People are doing it. People are adopting it. And they're going to need to do something. And it's a lose-lose situation for the US. They adopt it and they lose power of the dollar. They restrict access to it and they lose their citizens, and they lose innovation, and they lose, GDP. It's a lose-lose situation, and it'll be very interesting to see what happens. So yeah, it's a good strategy. Hold it for 10 years, keep it on a ledger, memorize your seed phrase so that basically, your ledger can disappear and you got your seed phrase in your head. And you can move to any country that is going to be favorable for you to live in that country. Is there any point in putting a stablecoin in a place like Celsius, or will the rates be too low for it to be worth during the bear market? So for me personally, I'm just too much of a decentralized, I have too much of a decentralized mindset where I don't want to give, it's bad enough that I use exchanges. It's bad enough that I trade on FTX, which I love, by the way. If you don't have an FTX account, sign up, support the channel. The easiest way to support us is just sign up for FTX. It's far and away the best. It's not just me shilling my link, it's the best exchange. But it's bad enough that we use exchanges for trading. So, giving over the keys to a company like Celsius, it's just, I don't trust anybody. I don't trust anybody with my crypto. And if it's a yield that you're after, you can get yields in DeFi. You can get it with a decentralized application like Aave or Compound. You just need to educate yourself on how to interact with an Ethereum smart contract, which is no easy task. It's something that we do teach in the Traders Academy, but it's not public knowledge. It's way easier for you to just send crypto to an address on a centralized custody like Celsius and allow them to provide a yield for you. But they're taking a cut. They're taking a cut. If you want 100% of the yield that you are owed, then you're better off using what probably Celsius is using. I wouldn't be surprised if Celsius is just taking your money and putting it into Aave, or collateralizing it across a few platforms, Aave, Compound, and whatever. But they're taking a cut. There needs to be a business model here, and the whole point of blockchain is to remove the middleman, get rid of the middleman. So put some there, I don't know, but don't be surprised if they force you to withdraw, and they force you to claim tax, they force you to do this, they force you to do that, because their hands are going to be tied, and they can only do so much because they need to exist within the legal framework. So for me, I don't invest, I don't put anything in Celsius. That's just me. If I'm going to want a yield on my crypto, I'm going to put it in DeFi. I was remarking on how much the world has changed with the advent of Bitcoin. But did you know it wasn't the first? Yes, I did. There have been many attempts to have a digital cash. I think one was actually called eCash, one of the early versions. I used Linden, was Second Life digital currency that was back in like 05. There was even a DEX for it. Interesting. Yeah. I think a lot of the issue with the early adaptations of these cryptocurrencies was the difficulty to get verified proof against a double spend. I think that's the Byzantine general. Anyways, I'm not gonna throw a bunch of words that I don't know. But the problem with the double spend, and that's where mining really kind of helped out with that, and the mining difficulty adjustment, and this continuation of more power for more security. And Bitcoin, Bitcoin didn't just figure it out all on its own. He was, I speculate it was Hal Finney, but Hal Finney was very involved with the the cyberpunk movement, and there were many times that we tried to create a digital cash, but they just didn't work, or the network effect didn't take effect, or whatever the case may be. They just flopped. But Bitcoin has network adoption. Bitcoin has a consensus mechanism that's working really well, and with the introduction of Taproot in November, we're going to have DEXs for Bitcoin, which is going to be very, very cool. USD is mostly digital, 100%. Yeah, it's mostly digital. But they're still going to move on to using consensus-based technology to create their own central bank digital currencies. All right, let's take a look. Avalanche looks like it's going for it. Well, it's not like ripping out the gates or anything, but it is ticking to the upside, and that's exactly what we want to see after a daily close. We got a beautiful, look at this candle right here on Avalanche. When you see a very long tail, this could be called a hammer candle, a shooting star doji. Actually, it's not a shooting star because it's not at the bottom, but anyways, it's a hammer. It's showing a lot of demand. Most of the effort being applied to this candle was to the demand side, and that's confirmation. We got a very solid close, and it's looking like a continuation on this one. It looks like we're ready to break $72 on the way to our first target of 104. Is Zcash part of the early innovation stage in crypto? So Zcash, it's a Bitcoin fork. It integrates a little bit of privacy. I don't really necessarily think Zcash has much of a future as far as just because its claims to fame are privacy, and with Taproot. Taproot is not going to make things anonymous, but it's going to make every transaction look the same on the blockchain. So you won't be able to tell if it's a multi-sig or an individual signature transaction. And because you can't tell all the transactions apart, effectively it makes the whole blockchain anonymous. Even though you can track everything and see where stuff is going, you effectively make the blockchain look anonymous because you can't tell what is a multi-sig and what is a single signature transaction. So, privacy, although I think it's important if you're really, really concerned about privacy and having a true digital cash. I think Tornado Cash is a good one, or you can just do Bitcoin mixers or Ethereum mixers. Monero has some abilities to be pretty private, but yeah, you're welcome. Cool channel. Thank you. What are your thoughts on investing in FTT coin long term? So I'm a huge fan of FTX, and as people kind of wake up, especially, whales don't want to move. Now, we have Binance whales. People made a lot of money on Binance. They exist on Binance, but Binance is going to shit. They're overloaded. They can't respond to support calls, and their benefits are getting less and less. They keep introducing new coins, and that's kind of the way that they keep people over there. But eventually, it's not really how whales trade. Whales stick to the higher market cap stuff. So they're going to realize that they receive better benefits on other exchanges like FTX. And FTX is just so professional. And they're really the only exchange out there that I can see that's really trying to emulate traditional finance and give you a lot of the tools that not only are available to retail in traditional finance, but are the tools that are available to accredited investors, giving accredited investor tools to retail. I'm a big fan of FTX, and I think that investing in FTT token although may not be the best if you're thinking long-term cycle to cycle at this point. I think that it can go up from here, but I also think that there is the possibility in the bear market that your entry that you have today, the bear market may bring it to an entry that's lower. So depending on your strategy, you know, maybe get in now, sell some when things get really stupid and crazy, and then average back into the bear markets, always keeping a little bit of core position with FTT. But I think, you know, it's a solid play because there's intrinsic demand. People need the FTT token to receive benefits on FTX. Plain and simple. It's one of the biggest fundamental things that I try to look for when examining any cryptocurrency. If you're looking to invest in a project, you have to ask yourself one question every single time. At what point do I buy the coin? As a user of the claim, when am I forced to buy the token? A classic example of this is Uniswap, okay? I can use Uniswap. You can use Uniswap. Anybody can use Uniswap. At no point do you need to buy Uniswap to use Uniswap. So why are people buying Uniswap? I realize it's a governance token and there might be those individuals who want to speculate and contribute to the DAO and have voting rights in the DAO. But that's the only value that it has. Whereas with FTT token, if I want to receive benefits on FTX, I have to buy FTT tokens. Another example is Axie Infinity, the governance token AXS. If I want to breed an Axie, I need 2 AXS tokens to breed an Axie. Sushi Swap. Sushi is one that I'm very bullish on. I think that that's a far better exchange than Uniswap. Sushi Swap will allow you to stake sushi to receive X sushi, and when you receive X sushi, you get a discount on the gas fees, and you get a discount on certain trading pairs. So there's a demand characteristic to sushi over Uniswap. So yeah, always ask yourself that question. At what point am I going to be driven to buy this? Matic is another example. Why do people buy Matic? Because if they want to use the Matic network, they want to use Polygon network, they need Polygon to use the network. Avalanche, we're looking at Avalanche right now. Why do you need Avalanche? Well, if you want to trade and use any of the DEXs on Avalanche, you need Avalanche to process the gas fees. So there's demand there. Most coins you'll find don't do anything. Audio tokens, completely useless for now. We'll see if they do anything, but yeah, they're pretty useless. Oh yes, that's a good privacy project. R, Pirate Chain, privacy coin congratulated by Monero. And Monero is one of my favorite privacy coins. I think Monero is, you know, the most decentralized and favorited of the privacy coins. But R is the new kid on the block, and you know, there's a lot of people who are. I haven't done a deep dive into R, but a lot of people are saying it's a very good project. Isn't there rumors about FTX creating their own smart contracts chain as well? So I actually don't believe that is going to be the case, just because FTX is so integrated with the Solana ecosystem. Basically, Solana is their DEX. Solana is their smart contract platform. If you download the Solana wallet or the Sole wallet, it has, you know, transfer from FTX right on the decentralized wallet. It's so plug and play with the Solana Solana blockchain that I really don't think that FTT tokens are going to be required for a smart contract platform. If Solana fails and goes away, maybe they'll try and do something, but honestly, I don't think they're going to pull what Binance did with the Binance Smart Chain because they're just so intertwined with Solana. HBAR. Everybody's talking about HBAR because it's going up. Pretty sure you missed the move on HBAR, but let's take a look. Let's take a look at HBAR. So HBAR, I took a look at it from a fundamental standpoint, and you know, I try not to get too fundamentalist about stuff. at this point in the bull run, because any project that's easy to understand will have buyers, and it's really that simple. I don't want the perp. So, you know, everybody's saying, oh, Hedera Hashgraph is super fast, super cheap. As far as I can tell, it's not a smart contract platform. So it's not an Ethereum competitor. It's actually a Bitcoin competitor. But its transactions are kind of irrelevant. It's had a huge run. It broke past the all-time high. It's on a reaction right now. So the trend is definitely healthy. There's no argument there. And you can see the demand coming in here. You can see just nice, steady demand, which is exactly what you want to see. The market likes H-bar. Fundamentally speaking, I don't think it's a long-term hold, just because of the fact that a lot of its claims are just, you know, layer one claims, and layer one doesn't matter anymore. In my opinion, it's about layer twos. I'm much more interested in layer twos than I am with you know, what layer one is going to destroy ETH. ETH killers have always kind of been a joke. Let's actually take a look at H-bar on let's take a look at H-bar on CoinGecko. Get a refresher. Lots of people talking about it, but you know, that's the bull market, okay? That is just simply the bull market. People talk about what coin is next, and then everybody jumps in, and then everybody jumps out. It's effectively just hype-based pump and dumps. They're not nefarious pump and dumps. They're just hype. You know, it's hype, an overpricing, and a market that can't carry it forwards. Ensuring decentralized governance at scale. A lot of big names owned and governed. So basically what they're saying here is, you know, these people have a position in H-bar somehow. And that could just be some crypto hedge fund. All of these names could simply be that all of these names decided to invest in a hedge fund, a crypto hedge fund. And then Hedera Hashgraph was like, well, all these people bought the hedge fund, and we're in the hedge fund, so great. You know, it's a lot of bold claims. So this is the stuff that kind of bugs me. So, third generation public ledger, blah 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 blah. So, Bitcoin 3 transactions per second, Ethereum 12 transactions per second, H-bar 10,000 transactions per second. What they fail to mention is that Ethereum scaling solutions on layer 2 are in the tens of thousands, and on Bitcoin Lightning Network, once you establish a Lightning channel, it's literally millions. You have millions of transactions per second. So this is still a layer 1. It's not a Gen 3. It's a layer 1 blockchain that's just a high throughput blockchain. It's not, you know, what you give up though with these high throughput blockchains is decentralization. So Bitcoin and Ethereum to me are still far better projects than H-bar, just because of the fact that they're fully decentralized and their scaling solutions are constantly being worked on. So average fee $22. This is not true anymore. You know, once upon a time it might have been, but this is just not true. It doesn't cost $22 to do a Bitcoin transaction. Ethereum, this is low. This is low. Like, you know, if you're doing a token swap, it's like $30 or $40, so that's out of date. And then Hedera Hashgraph is 0.001. You can get similar fees on a scaling solution on Ethereum, like XDAI. I just did a transaction on XDAI that was 0.00364. Not as cheap as this, but does this stay stable? And if it does stay stable, that's an indication of centralization. So, you know, it's just, I don't like it when there is a misleading of investors. So 3 to 5 seconds, that's slower than the Lightning Network. 10 to 60 minutes, that's also kind of untrue at this point with Bitcoin, because nobody's fucking buying Bitcoin. But Bitcoin Lightning is actually, it's seemingly instantaneous. If you press send on the Lightning Network, the recipient gets it immediately. BTC pumping. Boom, let's go back. Let's go back. Bitcoin pumping, what fucking time frame are you on, buddy? Pumping. Man, are you on the 1 minute? This is hardly a pump, my friend. False alarm. Yeah, so a lot of the claims, you know, they're just leaning into the fact that, you know, these numbers are true. Okay, these numbers are true right now, but they're painting Bitcoin and Ethereum in a light that is untrue. And I don't like that, because there are scaling solutions to these layer ones that are very, very good. Bitcoin Lightning is getting really, really developed. Setting up a Lightning channel is actually really easy. A lot of the apps are getting easier and easier for you to set up a Lightning channel. And Bitcoin Lightning blows this out of the water. Blows it out of the water. 5 minute. Hype! 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 Yeah, you know, I don't fuck around with the 5 minute. You a scalper? I'm not much of a scalper. I am a macro guy. And I mean, it looks good. We dipped below the resistance, right? Or we dipped below support and we got bought back up. It's a good sign. It's a good sign. So let's go back to H bar. What you would want to see is you want to see this area hold support. Now that the fundamentals are out of the way and we can just move on from the fact that I don't like the project, it doesn't mean it's not tradable. I kind of get criticized a lot with that. You know, I take a lot of digs at Cardano, and at no point do I ever think Cardano is not going to go up in price. I really don't. I think it's overvalued, and a lot of its investors think that it does more than it does, but that doesn't matter. The market will tell you what the market thinks. And here on H bar, the market is telling you that the market likes H bar. So we have our sign of strength breaking out of the consolidation, coming down here. We need to form some sort of support. So see that on an exchange, if retail comes in and they see how many sats they can buy, you are going to mark the price of Bitcoin to the fucking moon. Many, many, many multiples. Will basically start over everything that Bitcoin's done now to where it's going later. That's how you get those price objectives that seem absolutely insane, that I'm not saying are going to happen anytime soon, but I do think are a possibility of $10 million Bitcoin. Nobody's going to buy a $10 million Bitcoin, but what they are going to buy is a 10-cent Satoshi. Or they're going to buy a 15-cent Satoshi. That's going to be the paradigm shift on the order books and how this stuff gets marked up. So be on the lookout for that unit of account change, because unit bias is absolutely a thing. People don't want to buy Bitcoin because it's too expensive. So when it gets expensive enough to knock it down to Satoshis, now we got a different thing. So I'm rambling. I got to get out of here. Frozen. Okay, well, that's a good time for me to exit, because I've got to get into the virtual classroom. I've run way too long here. So thank you all for joining into the stream. If you want more information on our offerings, you could go to thecryptojungle.com, sign up for VIP. We can get you trader ready, investor ready, DeFi ready, whatever it is that you're wanting to learn inside of the crypto space, we can help facilitate that learning. So if you are interested, links below. If you don't already have an FTX account, sign up for FTX, easiest way to support the channel. And we will see you later. Trade safe. It is a jungle out there. Peace.